go across. Joining us this morning, Mark Matthews, Head of Investment Research at Julius Baer, joining us this morning. Great having you here, Mark. Obviously a great mind with regard to macro as well as how Asian markets should be looked at. Mark, let me start off with that. India has been a large underperformer versus some of the other Asian peers. How much of this underperformance do you think will sustain for the rest of maybe the next 6 to 9 months? Or do you believe that a reversal could well be at play? And where exactly in the cycle are we, in your opinion?
I think we are precisely at the inflection point. Well, maybe it was last week where India will start to outperform and will outperform Asia for the remainder of this year. And there's two reasons I say that. The first is the oil price. Even we, and I think we're one of the most bearish on oil among the economic forecasters, we were only expecting $75 a barrel by around now. And it's below that, of course. And I'm noticing tankers are now exiting the Persian Gulf, and OPEC is increasing its quotas. So the oil price hurt India more than any other market, ironically, even more than the Dubai Stock Exchange when it went up. I think the inverse also stands to reason, that India will benefit the most. And then the second thing is the rotation that we're starting to see away from these memory chip names in South Korea, principally, to laggards in other parts of Asia, which does not exclusively mean India. Hong Kong has been a big laggard as well, and Hong Kong has been used as a funding source for those North Asian markets. It was in the first half of this year. But I think what we're seeing now is signs that chip prices got so high, including the rental price of chips, and the usage of them seems to be declining if you look at various indices that measure that kind of thing. Anecdotally as well, you can read from the media that companies are finding it increasingly difficult to justify the very high expenditure of AI in their budgets. Many of them have already blown through the allocation they had made for AI for this full year at this point in time. We're only halfway through the year. And I don't know if you saw 2 weeks ago, Apple announced they were raising prices across the board. Apparently the iPhone 18 will cost $200 more than the 17 when it comes out this fall. All of that to me adds up to a sign that we have reached a peak in these semiconductor stocks, and naturally the corollary would be a rotation into laggards like India.
Mark, hi, morning. While you're seeing a lot of capex being put by many of the hyperscalers and users of AI, are you seeing a similar kind of capex coming in for many of the chip makers as well? Because we haven't seen that, and the recent spike in chip prices is also a result of the kind of supply issues which are going to come in.
The only things I've been hearing out of South Korea are very bullish, but the Korea is, I would say, not unlike India, that when they get bullish, they get very, very bullish, and vice versa. So I have heard no signs in Korea of moderation in demand from their customers. In fact, the big chip makers, SK Hynix and Samsung Electronics, are refusing to sign long-term contracts with their customers beyond a certain small percent of the total, because they still believe chip prices are going to go up. So I haven't seen from the chip producers themselves an indication of a top, but there are so many other things that I look at that lead me to believe that we're in the process of putting one in.
And from a macro point of view, given that crude has cooled off over 30% since the last quarter's peak, do you think there's further room for crude to fall despite the OPEC production hike, which is more notional in nature rather than actual?
Yes, we do target $60 a barrel approximately a year from now, which is lower than it is now. But I wouldn't say that's dramatically lower than it is now because it's around $69 a barrel. We've always felt that there is an abundance of oil in the world and not exclusively in the Persian Gulf. There are plenty of other places in the world that you can get it. And we've always felt that this is increasingly a legacy asset as, excuse me, the world moves toward renewable energy.
Okay. And Mark, in terms of the cycle where we are at, where AI is concerned, do you believe that there is a bubble? Could there be a ripple effect of that bubble, if at all there is one, across markets globally? Will it just be restricted to the markets which have been in bubble territory? How should one look at some of those aspects?
I actually don't want to call it a bubble because the price earnings ratios of those semi stocks are less than 10 times. But that's based on this year and next year's earnings. How about 2028? How about 2028, 2029? I just think back to the 2000s. There was another structural bull market story that was called we called it the super cycle. Commodity super cycle. China needed to buy all the commodities in the world. And I wouldn't have called that a bubble, actually, but it was a very powerful up move in all the commodity producers. Their profits peaked around 2011. And the analysts were still forecasting that the earnings would continue to grow in 12, 13, et cetera. They didn't. They went back down because commodity prices went back down. And so that's the corollary, that's the example I would use, excuse me, less the dot-com bubble, but more the commodity supercycle, just the idea that you can maintain such very high prices without some kind of demand destruction, I find hard to believe, and that technology won't evolve so that we can use it more efficiently and therefore use less than we had previously estimated.
And Mark, just in terms of what the impact of absolutely any withdrawal of the kind of move that we've seen in AI could be, could there be an India impact? Just in case you could see an impact on the NASDAQ and the like, could Indian markets also face that as a possible, should Indian investors see that as a possible concern?
No, I think it would be a positive because so far, at least, there's been a little air that's come out of the chips. If you just look at the Philadelphia Semiconductor Index, for example, and hasn't materially changed the trajectory for the NASDAQ. I think what you'd see instead of the whole thing coming down would be rotation, maybe back into the Magnificent Seven, maybe into other sectors like financials or healthcare. I'm not quite sure where it would go, but I don't think it would be a broad sell-off. It would be a catalyst for a broad sell-off, and actually indirectly it would benefit India because some of that rotation would be into India.
Mark, it was widely anticipated that the earnings would be hit because of the West Asia crisis for India. And now that we are getting updates on the Q1 updates from banking sector, from the FMCG, it seems that the impact on the top line at least is not as severe as was expected by the street. Do you see that as a positive and that bringing in some of the foreign flows back to India?
Well, I don't really have the insight to give you a good answer because I wasn't aware of that. But of course, if the earnings are coming in stronger than had been anticipated, then intuitively that's a positive. I don't really know if I can add more than that because I wasn't aware of these most recent numbers.
Mark, talk to us about the discount in terms of valuations, India versus, say, some of the other emerging markets. some of the sister companies, say of Korea, say LG, for example, trade at a significant discount in their mother markets, right? How should one reconcile that discount? It's always been the case. India has always been more expensive. But now, would things change just given the way in which India has underperformed? Could that, I'm just trying to play devil's advocate and get a sense what the downsides could be from here.
Well, India has traditionally traded at a premium to the emerging markets, as you rightly point out. And now, by our numbers, it is trading at a slight premium, but quite a bit below the long-term average premium. Let me put it that way. I wouldn't expect it ever to go to parity or a discount. Because of many different reasons, capital controls, size of the population. In fact, in my recollection, there was only once when India was at parity with the emerging markets in price to earnings terms, and that was the bottom of the global financial crisis. But where we are now, I think, is good value. We've had over a year to basically just move sideways, more or less, and so I think we're in a good spot valuation-wise. Is it a fantastic bargain? No, but is it a decent price? Yes.
Okay, Mark, thank you so much for coming in and speaking to us, giving us that perspective. Always good having you.
Thank you.